Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Andrew Crowell, Financial Advisor and Vice Chairman of Wealth Management at D.A. Davidson, to discuss the student loan issue in the United States. Andrew, it's great to have you with us. Welcome to Trade Talks, and certainly a timely topic as we are in National Financial Planning Month to wrap up October.
Exactly. Thank you, Jill, for having me. Pleasure to be here.
All right, you got it. Tell us about the D.A. Davidson survey on student loan debt and the methodology behind it.
Certainly. Well, we, going back to school in September, we decided to get ahead of that. And in the middle of August, we conducted a nationwide survey. It was a nationalized, demographically balanced sample of just over 2,100 U.S. adults aged 18 and over. And we posed these various questions about the student loan challenge.
How many people believe we have a problem, and how does the ability to pay vary by gender?
Two great questions. First, an overwhelming majority of those that we polled believe that we have a student loan problem. 81% of our respondents said that we have a student debt problem in this country. And it was consistent. 89% of those who have student debt think we have a problem, and 75% of those who didn't have any student debt still think we have a problem. So it's well recognized that this is an issue that's front and center for all of us.
Right. And when we talk about the ability to repay for gender, did you see any differences there that stood out?
Thank you. Yeah, marked differences. In fact, surprisingly so. Ours was a quantitative survey, which means we got the what, we got the percentages. We don't know the why. And we saw a big bifurcation between by gender, between males and females, and the ability to repay. In fact, when we look at it, 70% of males said that prior to the forbearance, they had been consistently making their monthly minimum payments. But at the same time, only 54% of females, again, prior to the forbearance in March of 2020, said that they were able to keep up with their monthly minimum payments. And then, 37% of the females that we polled said that they struggled to make regular payments. And that was different than only 26% of the males. So again, we know the what, we just don't know the why. And it sort of begs the question that financial advisors should be having these conversations with their clients and their families who have student loan debt as part of that holistic financial plan.
Yeah, because there's a lot that you could extrapolate from there if you understood the why. Right. Do respondents feel the Biden administration should extend the forbearance, and how does that impact the lenders?
Great question. Yes, 40% of those we surveyed believe that this Biden administration should have extended past January of 2022. The lenders have been tacking on those forgiven payments onto the back end of the loan, and they're accumulating interest. So the Biden administration was very clear that this was the last extension, and so we're not expecting it to push past the end of January of 2022. But the lenders, they'll keep collecting those payments eventually. It's just being tacked on to the end, and it's extending the amount of time that many of these students, when they get out of school, will have to keep making payments. Because if they stopped in March of 2020, if they stayed on the same cycle, they've given up basically 18 months worth of payments or more, and that's going to extend the lifespan of their debt by at least another 1.5 to 2 years.
Right. Was there a marked difference between respondents' views of the extension when it comes to their political affiliation?
It was very interesting. There was a bifurcation between, and not in terms of the use of the forbearance, between Republicans and Democrats. But we did find a couple of interesting data points along the way. We found that among the self-identified Democrats, 52% believed that the extension was about the appropriate length of time, but that contrasted with only 28% of self-reported Republicans who thought it was the right length of time of forbearance. So there's clearly dissension among our ranks in the United States about how much longer, whether it was enough, and now we're going to be talking about potential student loan forgiveness of certain demographic groups or subsets, and you can imagine that the political bifurcation there is even greater.
Well, the comments on Twitter are any indication, I can only imagine. So with the future of student loan cancellation changing day by day, there are a few things borrowers can do now. And since we're in National Financial Planning Month, what actions can borrowers take right now to tackle this issue? Great question, Jill.
I give a 3-point plan. First, get prepared to start making payments again come February of 2022. It's not too early to plan. Some of our students have moved during the pandemic, and they need to contact their lender and make sure that their information is up to date, that their address is correct, because they don't want to be late on payments. So start planning ahead, figuring out how you're going to budget for that each month, and make sure you can make those minimum payments and make them on time. Number two, I would say, think about student loan debt in the context of the entire holistic wealth plan that you have for your life. You may have credit card debt as well. How are you going to balance making regular student loan payments along with your regular other debt payments, maybe a car loan or a credit card payment? Really needs to be looked at in that holistic context. And where possible, it might be that there's a refinancing opportunity there or a consolidation opportunity there. There's some great programs just a Google search away for people to find out how they can consolidate debt at a lower rate, but they have to do that homework and get out in front of it. And I'd say the third thing is don't count on student loan forgiveness as your strategy. Whether it happens or not, it's clearly going to be a subject of contentious debate for some time. And so don't make hope your strategy. Instead, think about, can I make an additional payment? When payments restart, could I possibly, if I found extra cash flow, could I make an additional payment? And if perhaps some of my loan was forgiven, could I use that newfound cash flow to actually pay down my debt faster? Or could I add that to my savings and my retirement? So be strategic about not just the payments, but also your cash flow to make sure that it's all working together for your holistic plan.
Yeah, all excellent points. Hopium as a strategy, definitely not something you want to incorporate into your financial planning. Andrew, thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.